Welcome back to Thought Kernel, where we dive into educational concepts to be able to apply them in our real world. Today, we're going to be looking into computational finance and building a very quick Python program that analyzes the exponential moving average on short-term and long-term time windows to depict where the market should move in the future based on how these moving averages interact and intersect each other on the visual graph. And let's get into it. What is EMA? Well, the exponential moving average, as said. It's a type of moving average that gives more weight to recent prices compared to older prices when determining the mean of these prices over the period you're analyzing. It's used to smooth out price data, making trends easier to spot without the noise of daily price movement to get on them. Now, a different type of moving average would be the simple moving average, or SMA, which evenly weights the mean between all prices in your interval over your period of time that you select. So, what are the crossovers in exponential moving averages that we're looking for? Well, the crossovers we're looking for is when two exponential moving averages of different lengths intersect, usually one on a short-term and long-term scale, as said. Today, our short-term window is going to be around 100 days, and our long-term window will be 200 days. Now, this is usually for more long-term trading, which in my opinion is where this strategy performs better and where most people should be investing. Although this is not any investing or financial advice to anyone. So, the different crossovers we're going to be looking for is the golden cross and death cross. And essentially what the golden cross is what everyone is hoping for. This indicates bullish movement of the market. Essentially, the short-term window, the 100-day exponential moving average, rises above the long-term 200-day EMA. And now this indicates that an uptrend should be starting, while the death cross is the inverse and indicates a bearish market and that a downtrend is on the way. Although these crossovers can't predict the future in a literal way, it implies things based on momentum and a trend following logic in the markets that traders have to rely on because of the difficulty of determining where a market should move in the efficient market hypothesis. Now, welcome to Visual Studio Code. Today we're going to be coding one of the most classic trading strategies that we just talked about, the exponential moving average crossover system. Now, let's get into the code. Initially, I imported my essential libraries, yfinance, which retrieves its real-time data from Yahoo Finance, pandas, which helps handle my data like Excel spreadsheets and allows me to manage and easily plot it with the help of the next imported module, matplotlib, which really brings together a project in my opinion, especially if you're trying to impress peers or just have a nice overall project on your GitHub or portfolio. Visualization really steps it up a little bit and shows them you understand what the data means. You're not just plotting it down. Essentially, and now in the next part, we started off with the function fetch stock data, where the arguments, what these little classes are, is we ensure ticker symbol as the argument will be a string. And we did this for period and interval as well. And what this type annotation is, the arrow allows that whatever fetch stock data returns must be a panda data frame. Essentially, the class of what comes out of fetch stock data must be a panda data frame. And now, moving on, what's inside of the code, we set data frame equal to the yfinance download of the ticker symbol we set later on down here. We can see I have it set to the S&P 500 currently. And now for the next parts, we can see there's many attributes that go into, there's many attributes that go into the YF Finance download. And now the first one is always going to be the stock price, but the next ones could be any one. So when you're setting the period and interval, which the period is how long you're going to do it, 10 years, which I'm going to change this to 5, and the interval, so the close prices you're retrieving each day, which is, in my opinion, the best. We have to set those equal to what they are, so it's not just running whatever it could be of the many it just showed us. And now, next, we assemble the data frame exponential moving average for the 100-day period. Now, this is the data frame close that was retrieved in the YF download. Essentially, this is the close price for the span each 100 days, we take the exponential movement and the average of it, which is the mean. So then we also take the mean for the 200-day span exponential movement of the close price. And that is what makes our two exponential moving averages, and that's how we essentially calculate it. And now this is where we want to generate our signals that tell us whether to buy or to sell. And now moving into that, the signal essentially becomes 1 when the short term. So now I'm sure you're able to understand this and read it, but what this as type int does is turns whatever this is into an integer. EMA 100 is greater than EMA 200, that's 1. Essentially, when you return a true Boolean value to an int, true is 1, false is 0. So when you convert true or false into 1 and 0, that is how you get the -1 and +0 that we'll use later. And now the position is equal to the difference in the signal. So this is either 1 plus 0 or 0 minus 1. So this is what is going to be used in plotting to plot the buy or sell signal, that +1 or -1 that we just talked about. And now this little part, df drop in a in place equal true, if there's anything returned in the exponential moving average data frames that is empty, we just are going to delete it and get rid of it so it doesn't cause errors later. And then obviously we return the data frame. And now, moving on, we're going to be plotting the visuals with a big chart canvas. That's why the figure size, which you can adjust to whatever, I personally use the ratio of about 15 to 8 or 14 to 7. And now, moving on from that, we're going to be plotting the close price for the next 5 years as we have set, which is going to be a black line with a width of 1. And now when you're doing longer time periods, I tend to use lower line widths so I can really see each minute jump in price and not have the line width get in the way. Second to that, we plot the calculated exponential moving averages for the 100-day and 200 period in dotted lines of red and green. Or not dotted, dashed lines, as you can see in the line style. And now what we're going to be next plotting is essentially the buy signals or the sell signals, which you can see are generated by that position either equaling 1 or -1, which comes from the true or false being turned into 1 and 0 and just the difference shown above. So this plots it with either an up arrow for buy in green or a down arrow in red for sell, which we're able to label in the legend, which we'll get to later. And now, making the entire code or plot fancy, we add a title, we label the X and Y axis, we give it essentially the key to the map, and then we change the grid to make it look fancier with a tight layout, and then finally we essentially print the graph or plt.show and just show the graph that we've now programmed. And now to bring it all together into one final piece, we assemble the main function, where we assemble the variables ticker, which is equal to S&P 500, period, which is equal to 5 years, and interval, which is equal to 1 day. And now you can see when we call these as the ticker symbol, or as the arguments for that function, it inputs it for all this, essentially getting rid of a lot of the work just through this 5 lines of code, or 3 lines of code that we even need to change. And now the bread and butter on the toast, what puts it all together, if name equals main, is what runs the main function, which runs everything. And now this is pretty common practice in code, and I was hoping to follow the good conventions and obviously not be on production level or actually allow this to run through a bot or API, but just to retrieve data and output it, and let's see what we get. So I'll now save the program and let's run it, and it should output a nice graph, and we can see it generates a buy signal here, which it accurately follows, goes up decently, around $150 in price before declining, and $150 in price per share. And now it tells us that it's attempting to go down, which it accurately predicts, but a little bit later than someone would like. And the next buy signal obviously generates very nice returns with the unpredicted recent sentiment crash after tariffs and Trump coming into office. And this shows really how quantitative analysis is not able to beat news. Essentially, you will never be able to cover all aspects of the market with just one type of view. You need to play from multiple fields, which is why this just a strategy from a computer technically doesn't work without altering in other factors or understandings of that algorithm or program. Yep, so that's it. You're welcome to do this at home and adjust all of these variables as you like, or even change it to do simple moving average or however you would. It's extremely similar. Thank you for watching. Have a good day.